Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to jump right into the commodities technical analysis update. I'm going to give you my financial opinions across the board, work our way through the dollar yields, precious metals, and commodities and ETFs that I follow. And again, if you need any help with anything, check out finding-value.com over there. And we do have a discount going on. It is my birthday coming up next week. It's not immediate, but next week. So I'm opened up a code called Happy Birthday, which is in the description link. If you want to join for the first month, 50% off if you want to try it. We've got a lot going on here, so a lot of really good opportunities. I think it's a pretty good time to be looking at potential investments and the setups here. So let's dive in. Let's see what's going on. Oops. So we've got the DXY here. Again, we are pulling back in the DXY. Is this support level going to hold? So if we back out all the way, right? We've got this resistance line, and it's not a resistance line that is the line. It's a band, so to speak. So we've got a lot of trading that has occurred in this band underneath us. It's in this gigantic band here. And whenever you have a lot of trading that exists in that general vicinity, it generally acts as support. But as of right now, we are getting some good selling pressure in the dollar here. It is breaking down. Yields are generally what drive that. So it's the monetary tightness of America versus everything else. And it seems like to me that uh, during the middle kind of big commodity bull market, we see a decline in the dollar, the DXY. We see other currencies strengthen and the dollar weaken. So here we are coming back down. We are selling off. This could be a flag pattern to the downside, and we're breaking through this support region. We're just getting into that support region, so we'll see if we can break through it. Weaker dollar generally indicates stronger emerging markets, other currencies strengthen, and commodities do well because they're priced in dollars and the dollar is falling in relative strength. The 2-year yield, it's holding up today, 0.5%. And again, we've had a monster move to the upside. Is this going to peak out? Are we going to continue higher? I'm not exactly sure here, guys. I know a lot of people, they just think like everybody knows exactly what's going to happen in the future. All I can tell you is that we're at a high level, and I think it will remain high for a while, as long as the housing market is strong, is what I will say. So it looks like to me that we're somewhere in the range here of what could potentially go on. Maybe we'll even get up here. I don't know. We'll see. And then this guy drew maybe a little bit incorrectly here, so I'll just kind of throw that over here, make this a little shorter. Oh my goodness, what are we doing? There we go. Something like that, maybe, as we're going up and down. The 10-year down a little bit, down 0.6%. Again, I still think this looks strong. It doesn't look weak. This could be a bloody nose. We could see a retracement here back to that and do a retest and break higher. I still think it looks strong, even though we were down a little bit today. And TYX, again, this still looks strong. It's a breakout here, and I still think it could move higher. There's your flag pattern and then the continuation pattern up. So it looks good. TYX, TNX, basically flat. This ratio tells us, it gives us a bearing of where we're at. This is an inversion of the yield curve, and we're staying inverted. That's why we're down here. Now, when this cycle turns around, when the curve uninverts, and again, guys, we might be down here for a while. If you look at the last bull market here, we were down for a good period of time. That came down in 05 and went sideways and stayed pretty low till 07. Once we started coming back up, that's when we'll call it all hell broke loose. Say it that way. But this bull market in 2000, and that's where I think we're located. We're down here. We could come up and then come and compress back down. So we could have a slowness in the market. It's possible. I'm not saying that's what I'm predicting. It's possible. Now, a way that you can hedge yourself is with gold, because as this uninverts, gold will go up. Gold goes up when this TYX TNX ratio, when the curve normalizes. So right now we're low, and gold might be a good spot to be looking if you think that a slowdown is coming. Now, I think oil and all the rest is going to rocket, and I think the curve will stay inverted for a little while. And then I think gold is also a good spot to accumulate over time because we're at a very low level for this ratio. TLT, this is the bond market. We're up a little bit, but this isn't convincing. It's not like we're just rocketing higher. I think we're actually going to hit our heads here and roll back over, which is a possibility there. We've got a lot of selling pressure before this. See those 3 candlesticks here? Well, it's 4 actually, 4 candlesticks. Very large, very strong move to the downside, blowing through that support level, and no real response from buying pressure. So I am inclined to think that bond prices are going to go lower and yields could go higher, at least on the long end of the curve. Gold up a little bit. Gold has broken out of this falling wedge. I think we are going higher. So you've got a couple of things going on that conflict with each other here. We've got gold that looks like it wants to go higher. That's an indication, generally speaking, of weaker yields and an uninversion of the curve and fear in the market. But we've got bond prices that look like they want to go lower, which is not the same as what gold is telling us. So gold might be breaking away from the yield, that yield relationship. Maybe it's going to go up and we get a fear trade on the value of the dollar because the dollar is declining. So again, this is the dynamics could be changing here. Let's just watch it and see what happens. Gold looks very good to go higher. We are also on support of a couple of support levels. We have a support level going across and a support level coming across here. I think we're at a pretty good spot for gold. Silver's flat. Again, we're up against this resistance level. Could we go down a little bit? It's possible. If you look at how this is going, it's almost like we're doing the stair step pattern lower with large impulse moves lower. What could that mean? Well, I mean, silver usually goes up when there's fear in the market, when the yields come back down. What we'll call uninversion of the yield curve. If we remain inverted and if there's a lot more inflation pressure coming, it's possible that silver goes down a little bit more under certain conditions with interest rates going on up. So that is possible. And the interest rates really inverted in the summer of 2020. So where's the summer of 2020? Well, the summer of 2020 was right here. And then you could see we went down when the yield curve inverted. When the yield curve came back up, it went up ballistically. So I think we are consolidating. I think we could go up and down with the yield curve. We might even go back down like this. It's possible. I'm not stating that's my prediction. I'm just saying it's possible. Silver still looks really good, and it very well could rip here. So what I would do if I were a bull in silver is I'd take a long-term approach, be real slow with it. We do have oil going up, and I would just kind of wait and see. At some point, these can turn, and they're just going to rip because we're underneath resistance. And when we break those resistance lines, I think we're going to go to what I'll call the promised land. There's your resistance, the blue resistance line. We break up above this, we could go to the promised land. And again, that relationship with yields could break down like it did in the 1970s. So I'm not going to hang my hat on that relationship and say that that is for surely going to happen that way. I'm going to remain open and say, hey, look, we could break here and roll. Platinum also moving sideways. I know we had a couple of pretty good days last 2 days. Hopefully we can go back down a little bit so I can get maybe another ounce or two or something. But yeah, it looks fine, and it looks like we're just moving sideways here. XEU to gold ratio, this is looking a little bit promising. We have a nice big bullish engulfing. I think that we could go higher here in the gold and silver mining companies in relationship to gold. We're still at low levels. We still haven't broken the downtrend line, but it's looking. We'll see. We'll see. I mean, we could have one last flush out down here before heading higher. That is a possibility. So we'll see what happens on this. CRB index up 1.22%. We are actually looking really strong here, guys. I think we're about to break. I think we're going to rip it and commodities start wave three. We haven't broken out yet. Let's just be patient. Let's see what happens. Oil's looking pretty strong. Nat gas is looking strong. A lot of the different sectors look pretty strong. So CRB is just a representation of all those sectors, and I don't know. I think we're ready to rip here soon, very very soon. CRB to S&P 500, we're starting to stabilize a little bit. Let's go to the dailies here. Stabilizing, down 0.14%. We still have a lot of momentum. Work off that momentum, break out of our patterns. Let's get the momentum going to the upside. It is possible that everything starts to rally for a while. So again, this may be delayed or muted for a little bit, and then I think commodities will outpace the S&P 500 at some point in the future. GDX slightly higher in GDX. GDXJ is the same thing in SILJ. These could be considered bloody noses. We'll see if it continues up tomorrow. And I do think that these are all very cheap. So I would be looking in all of these areas for potential investments. My boy, crude oil. We'll call him. This is Kid Crudy. Kid Crudy. There's your bloody nose yesterday, and look, we continued higher. Continued higher. We got a weaker dollar. We got yields that were a little bit mixed. It was still flat inversion of the yield curve, but Kid Crudy is rolling on up. It looks very strong. I like it here a lot, guys. Way to go, crude oil. Natural gas also firming up today. It looks good. We had the bullish engulfing yesterday. I said, yeah, we're going to go higher probably. That's the statistical probability. We're higher today. Let's hope the momentum can continue and we can head higher. It is finally hot here, guys. It finally feels like summer here in Colorado. That looks really good from a long-term perspective. Look at this thing start to turn. You're going to start to see a lot of the companies start to add a lot of percent gains here, I think, if we can get this momentum to the upside with crude oil and natural gas. We're also seeing energy service companies play in this mix. So I'm very bullish. I'm I don't want to get too overly bullish, but I'm pretty dang bullish. Put it that way. XOP, yeah, you know me, crushing it. Look at that thing, guys. It looks really good. Heading on to the upside. I thought we were in full-on recession mode. That's what everyone's telling me, but I'm staying long, guys. Here we go. We're in another uptrend surge, I think, and it's looking real good on the weekly candlestick basis. We've broken out of this consolidation period. I would suspect a pretty good move to the upside here. OIH is also participating. We're getting through some of this stickiness area here, and we could be released to the wild. What does that mean? Well, it means your resistance or your overhead resistance ceases to exist, and the cheetah can run free. That's what I mean. And I know I don't talk about the cheetahs a lot, but the cheetahs are back. Another thing you can look at, what do we call this? We call this the Green Army. The Green Army is a bench of green, strong, finished candlesticks. So they open the week and finish the week strong, and there's a lot, and there's very small selling pressure. It means that there's an imbalance in the market of buyers and sellers. The buyers are rushing in, not many sellers, or the buyers are just overwhelming whatever sellers there are. I think we could see a very big move in energy starting already. The Sprott Uranium Trust, you can see that we are firming up. This is exactly what we want to see. We can see that we had a low here, about a higher low, another higher low, 1815. We want to break 1815, and that's what our eyes are set on, right up here. That's where we want to break. Uranium firming up. We're seeing the big boys firm up. It looks good. Let's hope the momentum can continue. And URNJ, the small guys haven't participated yet, but this is the ballistic crew. And I think this will eventually work its way on up. Could we come back down a little bit and go sideways for a little longer? Yes, we can. I know a lot of people, they have this like immediate, they need their stuff to move immediately. It's like this bias that everything's going to happen immediately. Swipe left, swipe right, just get it done. You got to be patient here, guys. Be patient and let it work for you. Just let this play out for you. Everything looks good from a long-term perspective. TAN putting in the bloody nose. I think it will probably head higher in the short term. And again, everything looks fantastic from a longer-term view. And even if this were to dip a little bit more, I think we will eventually work our way on up. COPX, we're still moving sideways, but guys, I am very bullish on the diversified mining companies. You start looking at the individual companies, they look very good. They're paying fat dividends. They're back at very cheap levels, and we've broken falling wedges. And again, if you want to know what those companies are, sign up for finding-value.com and use the happy birthday coupon code. So that's what I'm seeing in this sector. It looks good, very good. Lithium. Lithium continues to work its way on higher. Now, again, I don't think it's going to go straight higher. We're going to have some down days every once in a while, but broken pattern to the upside, I see a move on up for lithium. Could this be wave one, a wave two pullback, and a big wave three coming? And what does that look like? Well, I don't want to get too bullish here, guys, but the way that I view this, and I could be wrong, but I think we're going to come up, we consolidated, and then I think we're going to do something like this. And then we'll consolidate like this, pop up, consolidate, and then come back down. Something on the lines of that is what it's going to look like. 2027, 2028, I don't know, something like that is what is possible. So that's my best guess. REMX also looking incredibly strong. So this is one that has also broken to the upside. This is where I would be entering it myself. I can't give advice, but that's what I would do. And I would be riding this thing on up. I would take a fat position here myself. SPX up a little bit. Again, I'm not in the bear camp yet. I think this still can go higher. It looks really good. Same with the NASDAQ. Everything looks good to go higher. These are just, consolidation little things. I don't see much selling pressure. I think that we could see an everything type rally where this goes all the way up. It could even do a double top. We could maybe even go higher than that and put in a higher high. It's possible. Generally speaking, when everyone's bearish, I get overly bullish. Emerging markets, we had a weaker dollar. Emerging markets, I think, is a spot to be looking. I think this is going to go up dramatically. Emerging markets looks fantastic to go higher. XHB, the home builders, continue to go up. We are in a housing market expansion phase. That is where home builders make a bunch of money. If you don't have any inventory to sell of existing inventory, you know where they're going to go? Hey, home builders, we're going higher because they're going to sell more homes. More than likely, I am guessing that we're going to see a good housing starts number whenever it gets released. And that's why this is breaking to the upside. A lot of the home builders look very strong. MOO is also looking strong. This is your fertilizer and agricultural companies. Look at the green candlesticks, guys. Do you know what I would do here? I would buy it. I would buy it. I would already be in this. And people who are going to the question and answer sessions, my opinions on fertilizers and all these other things. That looks good. Copper right underneath its resistance level. Now, could this go dip down before heading higher? It very well could in the short term. I'm not playing these in the short term. I'm playing them for the 2020s decade. I don't think that we're going to be anywhere near 377 5 years from now, 6 years from now. We're going to be probably triple, quadruple, maybe even more than that. I know that seems weird, but we are going to get into a situation where we're getting into deficits in a lot of these commodities, copper being one of them. And I have a vision that we are going to go a lot higher for that. Iron ore down a little bit. Again, this looks good for a move higher. We've broken out of patterns. We're sitting where you're supposed to be buying. Nickel, and that's not advice. It's just my opinion there. Nickel up 0.14%. Looks okay. It's not, I wouldn't say this is the best looking chart, but we're back against support. We'll see if it holds. Aluminum up 0.82%. Looks like we're getting a little bit of buying pressure finally. We're up against support resistance. Again, let's see if this support holds and if we can get some momentum to the upside. Baltic Dry Index up 1.5%. I think we're going to go higher here. This is where I would be looking at potential companies. False breakdown. If it was going to crash, well, why didn't it crash down at the false breakdown? That's why we came higher with 1, 2, 3, 4 weeks of massive buying pressure to get us back up. We're going higher, in my opinion. This is where I would be looking. Newcastle Coal, I've talked about this before. We've got the support level. We've come up, we've come down. It's going to base out here, and that's where our opportunity is going to be. I would be watching it. I'd be looking at coal companies if you like coal. I'm a natural gas guy. I'll admit it. But coal, it's going to probably base out a little bit, and then it'll probably lag maybe natural gas. Ethereum down a little bit. Surprising, actually. We're down here a little bit. Quite strong and a pretty good close here on this selling pressure day. Let's see tomorrow what happens. If we get follow through, then we could go lower in Ethereum. If it were me, I would be looking for a move higher in this setup here. And why I think that is this is your basing pattern. You break out, you consolidate kind of here, and then you move on up. But again, these are all newer products, I will say, trading products. And we don't have the long-term history on it. So be very careful because we don't know what interest rates and we don't know how this is going to interact with interest rates and how speculative this really is. But Bitcoin's still looking very strong. That still looks to me like we could go higher here. And it's already broken out. So I would have assumed that Ethereum would follow what Bitcoin does, and Bitcoin's the big daddy. But that's me. This is just consolidating up here. And then eventually we'll work our way up. So that's what I'm seeing in the markets today, guys. Pretty bullish if you got oil, energy, nat gas, energy service. That's some pretty big moves in some of these companies. So again, I think everything looks pretty strong. Looks very strong. And if you guys are interested in the individual companies and how to play this, yeah, definitely sign up to findinghighvalue.com. Use the word happy birthday for the coupon code and get 50% off the first month if you'd like to try it out. But that's what I've got for today, guys. Thumb up for the content, subscribe to the channel, and catch you guys later. This is Finding Value.